Hello and welcome to Big Deal. We are celebrating our birthday today, and today we are going to discuss a very important topic, which was a big theme for 2023, and we are going to focus on the equity market deals. Now remember that there has been a return for the IPOs in this particular year, and also block deal frenzy has been the flavor of every equity market window that we have seen even today. So for that, we will discuss the exits and the returns for the investors, as well as the highlights and what lies ahead on Big Deal today. And let me welcome on the show Geshu Kaushal of Kotak Investment Banking. We have with us Pranav Parekh of Nuvama Asset Management and Atul Mehra of JM Financial. Lady and gentlemen, thank you so much for joining us on CNBC TV18. Now, Atul, starting with you, how has the year been according to you? Can you summarize the frenzy that we have seen in the equity market transactions? You've had so many years and you have seen so many cycles. This year has been an outlier in many ways.
So thank you, Nisha, for inviting us, and it's always a pleasure talking to you. So let me summarize the calendar year 23 for you. It was a great year in all respect. What we have seen is in terms of both volume, the size of transactions and the number of transactions have been very, very impressive. What were the key takeaways, if you ask me, drilling down into it, there are a couple of very interesting takeaways which is there. Number one, what we've seen is the average size of the transaction, which India has been struggling for a very long time, is started to improve and improve dramatically. The average size of the transaction that we saw in 23 is in north of, I would say, 1,300, 1,400 crores, which is a very impressive number. Number two is very impressive is both in terms of the quality of the transaction, the uniqueness of the transaction, the management quality which backed these transactions, and the returns that the investor made from these transactions is simply superb. So that was the second trend. And the third trend that we saw was that the pipeline, which is building up because of the robustness in the market, is very, very impressive. And we hope and we believe that the calendar year 24 is going to be a better year than the year 23 that has gone by. Again, there are some interesting trends that is very important for us to see and note about it. Number one, we are seeing a whole host of companies tapping the capital market. But if I was to chisel it out, what I would see is the four genres of companies making the most out of it. Number one, financial services. Number two, the consumer stories. Number three, high quality consumer tech companies. And number four, what we are seeing emerge very slowly is the industrial companies taking to the market. So the trend is very, very encouraging. Particularly what is heartening for all of us is the volume that we have seen in the block trade window. Now, this is very, very interesting, very, very important, because the data that you see from the block trade is often mixed up with the bulk window, the OFS, as well as the block trade. And I believe that's a very sizable volume that is happening in the market. It's very important, very crucial for two or three reasons. Because number one, this is an alternate for the sponsors or the private equity or even the promoters to dribble out their shares in the market.
Yes.
Previously, they would look at doing a strategic sale. So the block trades are now becoming an alternative to what we call as a strategic sale. And
absolutely, Atul. I would say that the biggest takeaway for this particular year has been that the promoters and the private equity and investor community has found comfort in the fact that the Indian markets have the ability to give them an exit. They don't have to wait for either an IPO from the private market or, on the other hand, a strategic sale. We have seen many companies having delisted in order to sell themselves when the valuations had run up. Case in point being one of the big IT companies. So that particular anomaly in our market has been corrected for the first time. So this is the biggest takeaway coming in, and hopefully this will continue. It will reinforce the faith of the investor community in our market. Now, Gesu, coming to you, of course, a lot of trends picked up. IPO frenzy. How do you see the return of the IPOs in this particular year after it took a backseat in the year 2022? And the size and the theme were quite different from what we have seen in the past. All right, Gesu, can you hear me? All right, I'll come back to Gesu with this. But Pranav, talking from an investor point of view, now you look at the private equity space, and a lot of frenzy in the IPO market recently has been really driven by the pre-IPO investments that have been made and the several rounds in the pre-IPO space. And you have a very good hold on that. So give us a sense of the IPO frenzy that we saw. Of course, it's different from 2021, but we did see the startups come back in this particular year as well.
Yeah, well, firstly, thank you, Nisha, for calling me on the show. I think you're absolutely right. If you think about it from a private equity investor's perspective, the IPO markets are a great service to the investor community, because at the end of the day, ultimately all of us have to exit, right? And public markets providing this great exit opportunity is a very welcome step from a private equity perspective. In fact, if you think about it, over a period of the last few years, if you see about 70+%, about 80% of all the IPOs that happen in this country are actually OFSs, right? And that's simply because, as you can imagine, the primary requirements of the companies as they grow have typically been met by private equity guys. Now, what happens is then the IPO market become the liquidity event for promoters and private equity investors. And then when you have size and scale in IPO markets coming in fact, a classic example of block deals you talked about a little bit. I mean, it's great, right? Because now you're able to do thousands of crores of block deals at one go. And therefore, private equity doesn't need to wait for years and years to dribble out in the market. You can have high quality investors coming in and take large chunks of the company in the public market. So I think the maturity of the public market system in this country and the size and scale that we're getting to actually enables even higher private investments in the country. In fact, as you
Right.
know, yeah.
Right. A very important point made there, Pranav. Let me also introduce Gesu into the discussion. Gesu, I was asking you about the theme that played out in the return of the IPO market for this particular year. What were the key trends and highlights according to you?
So hi Nisha, thank you for having me. I think I'd just like to supplement some of the points that Atul made earlier. We've seen, of course, a very good bullish, buoyant market this year, and we do hope that this will continue as we get into 2024. Some of the key themes that I think were important and that we noticed was the overwhelming interest of domestic investors. I think this cycle of the IPO market has been led by domestic institutions and domestic retail investors, and a very, very large participation by family offices and AIFs. So I think that's been very interesting this year. We've discussed earlier, the block deal volume, size, everything has been great, and that's primarily because deals from 2021 vintage. A lot of the lockups for those companies got over for pre-IPO shareholders who were also private equity investors. So they found great opportunity and liquidity in this market to exit, partially, of course. The deal mix has also been very interesting. We've seen, of course, continued interest from healthcare and healthcare and consumer sectors.
Recording in progress.
But we've also seen technology deals. We've seen a return of conglomerates. So I think that's been interesting.
Right, that's right. So many of these points, but you spoke about the frenzy by the investor community. Now, Atul, Tata Tech, that was one of the biggest IPOs in this particular year. And of course, coming in from a well-known Tata name from a conglomerate after decades. How did that pan out, and what was this frenzy all about? You were in the midst of that action.
So Tata Technologies, as you know, is a global engineering research and development company. It's an IPO from the Tata Group after nearly 20 years. It was a pleasure and an honor working on this transaction for my firm and myself. We say so very humbly because in 2004, which was the last issue of TCS, which was last public issue of TCS, again, we were involved as the left lead manager, and the demand at that point of time was the highest received at that point of time. Today, fast forwarding life 20 years down the line, in 2023, when we did the IPO of Tata Technology, again, the response was mind boggling. And again, we were very humbled to say we were the left lead manager again for this transaction. Now, if you analyze and dissect what was this response all about, this response, to my mind, if I was to summarize it in 2 points, I would say it was because of the Tata brand name and the Tata Technologies mission to innovate, grow, and create lasting value for the investors. So this was the two themes, to my mind, which saw the kind of response that we've not seen for a
Yes.
very long time.
That's right. In fact, from the house of Tatas and Birlas, it's a different chord that is really struck with especially the retail investors. Now, Gesu, I want to delve a little on this as a theme. Now, in the last few years, since 2021, we've seen that the big conglomerates have come back to the market after decades. JSW Infrastructure, again, was one such IPO. Give me a sense on what is the difference between a novice and an IPO coming in from a large, well-set conglomerate whose name also rings a bell and who are very well prepared with so many other listed companies in the group.
So I think, Nisha, the 2-3 things that stand out for investors, of course, one of the points is about familiarity of the name, but also trust. I think if you have a house which has many listed companies who've focused on giving returns to investors, one new company from that bastion also is received very well by the investors. So that's one point. I think also such companies and promoters and conglomerates are aware that investor returns is important, and therefore pricing of IPOs is done in that context. So I think that's another thing that plays out. Of course, these are also set businesses who've been around for a couple of years. So financial performance, stability, growth, all of those factors play in.
That's right. So it's a different kind of an IPO dynamic. So when we see the large conglomerates coming in, and we have seen a spate of that, and it will continue for the next couple of years as well. But Pranav, from the startup IPO, that came in as a frenzy in 2021. And also that led to many investors burning their fingers and then losing steam in the last year. But this particular year, Honasa has probably proved the point in many ways. Does it give a lot more confidence to the probable future aspirants from the startup space?
Yeah, firstly, what is a startup, right? I think we keep on calling all these companies startup. To be honest, all of these are actually quite mature companies. These are all 10, 12, 15 years in the making, right? I mean, if you go to the public markets, I think the public markets expect a certain level of maturity. And like you pointed out just a few seconds ago, that maturity defines how public markets also sees it. And that maturity is not only in the context of, how you treat the investors, how you come across to the investors, but also as how you build a business from a governance, from a sustainability perspective. And that's what, for example, people like us do when we come in, 2 to 3 years to IPO. Our endeavor is to ensure that whatever we're putting in place is sustainable. I think that's what you're seeing. I think some of these, if you want to call it, early IPOs kind of paved the way for more maturity in this, the new age type of companies or current age type of companies, if you will. And I think you're going to see that consistently now, improvement in the quality and the type of companies that are able to go IPO. And I think people are ferreting very clearly, what can go IPO and what should still wait to get to the public markets, because public markets demand a certain set of stable, revenue, income projections, PAT projections. So I think, and that's what the last 2 years have seen.
Right. I have a lot more to discuss with all of you, and especially Pranav, when we spoke about these new age companies. Valuation have been one of the biggest talking points. We'll pick that up after a very short break on Big Deal. Stay tuned. Welcome back. You're watching Big Deal, and we are discussing the equity market deals in the year 2023 and the way forward. Remember that huge amount of money has been taken as exits and returns by the investors in IPO as well as block deals in 2023. Now, you're discussing this, Pranav, very quickly. How is the pipeline looking? Because you are into looking at growth stage and late growth stage investments. And those are the ones which get ready for the future IPOs. How's the pipeline looking? And also, how are the valuations stacking up from the new age companies?
Yeah, I think the pipeline is actually building quite well. At least for the last few months, we've seen a fair bit of pipeline. In fact, I tell our investors we are one of the best pipelines that we've seen in a long time. It's a culmination of two things, right? And we cater to liquidity requirements for people who want to kind of exit right before the IPO. And we also cater to the growth requirements of the companies who want to take some growth capital right before the IPO, 2 to 3 years to IPO. So I think because we straddled both and we can understand we have a great relationship with private equity firms, and then we really understand the public markets really well. We straddle this pretty well. I think it's a great time to be in this space. The growth requirements for for the companies, given the growth of our economy, is massive.
Yes.
So you're seeing that, and then you're seeing a lot of equity firms wanting to sell. So it's a great time for us to be here.
So in terms of the new age companies' valuations, what do you have to say? Are they understanding now?
So, I have to say that Nisha, that look, the new age companies some of them have been listed for almost 2 years now. I think there has been a good understanding of the companies that are, planning to go public, of how the public markets behave. There's also learning and understanding at the end of the investors who are now expecting profitable growth companies that have, solid fundamentals, who probably not just showing path to profitability, but actually showing signs of becoming profitable. So I think both ends have kind of learned over the last 2 years, and we do expect that there's going to be a very good year next year, actually, for a lot of new age companies. And
all right. So the biggest catalyst, I would say, is the equity markets showing rich valuations, and the run-up in the equity markets that we have seen recently also, and many windows have been provided in this year. Atul, final word on the key themes that you are seeing, and given a mix of many interesting factors like the political risk, geopolitical risk, and the inflation as well as interest rate lag effect showing up next year. All put together, how do you see market and market supporting your business and the key trends?
So very bullish on the next year, which is calendar year 24. We see it to be a great year. Pipeline is building up fantastically. High quality companies, great management. Though there is a high concentration of financial services, consumer business, leisure, travel, and I would say the consumer tech digital business that you referred to. On a whole, I see it's a very, very balanced market. What is interesting, what is really, really appreciative and is going a long way is that investors are coming in a very big way into the market. Look at any IPO, 60 to 65% of the demand is domestic, 35% is foreign institutional demand. What is more interesting is the retail participation, both at the retail level and what we call in JM as the upper retail, which is the old definition of HNI. I think we are seeing tremendous demand in that sector. And that's essentially because, and solely thanks to SEBI, because the timeline has been curtailed from good old 45 days to now a week.
Yes.
From the time you make an application to the listing. So the velocity of the money that can move in the market is very high, and that is adding fuel to the fire.
Okay,
So there
Atul,
is
so
a
a
great
trick
demand.
question finally. I have only 2 seconds. A trick question, hand on heart. Are the valuations stretched, especially in the IPO market, even though there is frenzy?
Hand on heart answer, the valuation at first look seems to be marginally stretched, but then when you analyze it, this is a once in a lifetime opportunity where India is really shining, and great companies within India with great management will not come cheap. So you have to
All
take a
right,
3 to
all
4
right.
years view and buy great
Yes.
management.
All right. So given the bullish outlook on India, the Indian companies will not come cheap. Thank you so much, Geshu, Pranav, as well as Atul, for giving very interesting thoughts and the way ahead for equity market deals in the next year, 2024. So that's the roundup. Very bullish trends, and equity markets are expected to show a lot of traction and action in the next year as well. With that, thank you so much for joining us on Big Deal, and keep it with CNBC TV18.